I'm going to play some earning trades in this video. If you haven't seen one of my previous videos where I showed some earning trades, I definitely encourage you to watch it before watching this one so it completely makes sense. So let's see how I'm going to trade earnings for Delta Airlines. So right now I'm in Tastyworks, and as you can see I have the option chain in front of me. And what you can see is that you have this purple line at the top. And that basically means that you have the earning announcement that is coming. And you can see actually the date on the right, and it's on October 13. And you can see that there is that bell sign. And as I mentioned in my previous video where I was explaining how I trade earnings, I basically trade earnings the day before the earning announcement. So hopefully to buy it back the day after the earning announcement once the IV crush happened. And if you're wondering which expiration I'm choosing when I trade earnings, I'm going to choose the expiration that expires right after the earning announcement. So the closest one basically. So in our case, that would be the October 15 expiration. So if I open it, then you can see all of the different strikes available. You have on the left side all the calls, and then on the right side all the puts. And if you know how I trade earnings, I basically sell a short strangle. So a short strangle, just to recap what it is in case you wouldn't know, if you have, for example, a stock that is moving up, down, and let's say up again, basically when you trade a short strangle, you're going to bet that the stock is staying within a range. So it means that you're going to sell a put and you're going to sell a call. And if the stock stays within that range, then in that case, you're going to make a profit. And if the stock goes out of that range, then in that case, you're going to make a loss. And regardless of where it goes, if it goes up or down out of the range that you chose, then in that case, you're going to make a loss. So now comes the question on which strikes do I like to choose. Personally, I like to go for around the 20 delta, 25 delta. So basically, that would mean that I'm going to sell the 42 strike for Delta Airlines and the 45 strike. So meaning that I'm selling the 42 put and then the 45 call. And if you see this column that you have on the right for each side, meaning the calls and the puts, you see that you have the delta. And that's usually what I'm going to refer myself to. I'm going to look at the delta, meaning that I'm going to go for the 20, 25 delta on both sides. That's why I chose the 42 put, because it's around the 20 delta. And that's why I chose the 45 call, because it's around the 25 delta. So I created my order. You can see that I would make basically a max profit of $50 on that trade. It would take a buying power effect of $738, and I have basically a probability of profit of 64%. But obviously I'm going to only be there for one day, so I'm going to sell my strangle right now, and tomorrow when the market opens, normally if the stock stays within my profit zone after the earning announcement, then we'll see the volatility going down, meaning that option prices are getting cheaper, and so that means a profit for me. And right now you're probably thinking, okay, but $50 is really not much, and even if it's $50, it's actually if you make 100% of profit here, and if you make, let's say 50% profit, you're going to make $25, and it's not much. After that, nothing prevents you to sell more contracts if you want to. Personally, I think that if you trade small, it's always better because you never know what can happen. And here, as I always say when it comes to trading earnings, you're not there to just make a big home run. You're literally looking for small gains after small gains, and you do that over and over, and that's what I personally do. So what I'm going to do right now is that I'm going to place my trade, and then I'm going to cut the video and come back tomorrow after the market open to see how my trade did. I'm going to click on review and then send order. And then we can see that now the order is working, but it's actually not filled because normally it would make a sound. So if I go in my activity tab, you can see that my order on Delta Airlines is actually still working. So what you can do in this type of case is either you can wait for your trade to actually get filled, or what you can do is move the price at which you set the trade for so as to get filled faster, basically. So if I, for example, click on replace order and I decrease the credit that I'm going to receive in that. Ah, but actually, it just got filled live, literally. Like, I didn't even plan that. So that's actually quite a good thing to see in live. You see, sometimes you just need to wait like for, let's say, 1 minute, and then your trade gets filled. So now that my trade is filled, I'll see you tomorrow once the market opens to see how my trade did, and we'll close the trade together. So see you tomorrow. So welcome back. It's now October 13, the day after I placed the Delta earning trade. So let's see how Delta Airlines behaved. This is the chart for Delta Airlines, and as we can see, actually the stock misbehaved a bit, as we can see. So what I basically did when the market opened, unfortunately I wasn't here, so I couldn't actually record what I did on the call side. My call side actually, decreased in value a lot because the stock went down so much. I was able to close my call for a profit, but obviously, as you can see, by the stock going down, my put side is in trouble. And actually, if we go into my position tab, you can see that I have a trade right now that is Delta Airlines. As you can see, that was my earning trades, and now there's only the put side to it because I close my call side for a profit. And you can see that I'm in a loss of $66. So obviously not the ideal case, and that shows several things. First of all, it's quite nice actually that I have a loss on that trade in particular, because at least you can see that even though you have a low EVR, even though you put the odds on your side, it doesn't mean that you're going to be right all the time. So that's actually quite nice that this happened. So this is actually a good case study. But obviously now the question is, what am I doing with my put side for Delta Airlines? I have a couple of options, no pun intended of course. I have a couple of options in front of me. Either I close my put side, I just buy back my put, and so I just take a loss of $67, and as I was on a profit of around like $25 on my call side, then overall I'm going to be in a loss of $45. Or I decide to leave it, hoping that basically Delta Airlines is going to come back toward, like, let's say the $43 per share level. Or I decide to roll my trade, to roll my put, meaning closing my current position and selling a new one and selling a new put in a later expiration, so as to hopefully turn that loss into a profit. And that's exactly what I'm going to do. So let's do it together. So this is actually quite a cool case study. If you have never been trading earnings and you're wondering how to manage losers, then this actually is exactly how I'm going to manage losers. So to roll a trade, what you need to do is that you need to go in the expiration where you had previously sold your put or your call or both. You need to buy back the option that you had previously sold. You can see that I have this -1. It means that I had previously sold that put. I'm buying it back, as you can see. And what's interesting is that you can see that at the bottom left, there is BTC for buy to close, meaning that I had sold to open my put and now I'm buying to close. And I'm actually going to realize a loss of $57, as you can see. And that's very important to understand when you roll a trade. Like, nothing is magical. When you roll a trade, you're closing your current position, you're taking a loss, and then you're selling a new put or a new call in a later expiration. Because sometimes I feel that rolling is associated like to not taking a loss, like to postponing a loss, but you are actually taking a loss. But rolling is essentially saying, all right, I was wrong in this expiration, but I'm betting that in the next one, I'm going to be right. That's exactly what rolling is. So once you have bought back your put, you're going to go in a later expiration so as to sell a new put. And now comes obviously the question, which expiration am I going to choose? Well, when I roll a trade, I'm always going to roll for the monthly expiration. So if we look at the option chain for Delta Airlines, you can see that you have all those weekly expirations with the W's, and then you have the monthly expiration, the November 19th expiration that is expiring in 37 days. So I'm going to go in this one and I'm going to sell a put at the exact same strike that I have closed my put at in the previous expiration. So I'm buying back my put at the 42 strike in the previous expiration, as you can see. So I'm going to sell a new put at the 42 strike, but this time in the monthly expiration. And you can see that by doing this, I'm overall making that transaction for a credit. As you can see here, it's written net credit. It means that I'm rolling for credit, and actually it's a credit of $1.33. And some people are going to try to move their strikes further away out the money, and that's completely fair as long as you're rolling for a credit. It's as you want. There is no right and wrong answers. I really want to emphasize that. But personally, I took the habit of always rolling my trades to the same strikes, and I just felt comfortable doing this. So let's do this. Let's sell a new put at the 42 strike, collecting a credit of $2.25. But as I'm closing my trade on the previous expiration for debit and selling a new put in this expiration, that will make a credit of $1.33, as you can see. Let's try to see if it gets filled. Well, you heard it. Now it's actually filled, and I actually roll my trade now for the November expiration. So now about the new trades that I'm going to place. Tomorrow, before the market opens, we have Morgan Stanley, Bank of America, and Citibank that are announcing their earnings before the market opens. So exactly like Delta Airlines, I'm going to place trades today. So my trade is on while the earning announcement is actually happening. Because it happens before the market opens, I'm exactly doing the same thing as Delta Airlines. Let's look at Citigroup first. So if we look at Citigroup, exactly like Delta Airlines, I'm going to go for the closest expiration. And exactly like before, I'm basically going to go around the 20 delta for my short strangle, and that's basically my usual thing. Now you must understand it. So I'm, for example, going to sell the 67.5 strike, and let's say I'm going to sell also the 72 strike. That basically makes a max profit of $60, and hopefully this one actually works out. So now that I've chosen my strikes, you can see that it's always the same thing. Basically, I'm always doing the same trades over and over, choosing approximately the same strikes in terms of how far out the money they are. And I'm going to collect basically a credit of 59 cents. So let's see if I get filled. So now my trade has been filled. As you can see, I collected a credit of 58 cents. So now let's talk about Morgan Stanley and what we can do with it. So once again, I go in the closest expiration. And as you can see, if I, for example, go for the 21 delta, so meaning that I'm going to sell the 95 put, collecting a credit of around 49 cents. And let's say that I'm going to go around, here I'm hesitating between the 101 strike and the 102 strike. So let's say I go for the 102. That would make me collect a credit of 86 cents, as you can see, meaning that it's a max profit of $86, and it would take $1,636 of buying power. So without waiting, let's get into it directly. I'm going to decrease my mid price just to make sure I get filled, and then let's see if it gets filled. Boom. It already gets filled, and now it's done. So now let's talk about Bank of America, and I already looked at it before, and let's see together. There is not a lot of big premiums there, and I'm just wondering if it's actually worth taking a trade, like let's say around the 20 delta, and actually I'm only going to collect a credit of 33 cents, and it's really low, meaning that it's a max profit of potentially $33. And here I agree that it's really not a lot, and I'm actually wondering if it's worth actually putting that trade on, because you know, you're going to put $700 on the table just to make potentially $33 max. So I think that for Bank of America, I'm actually going to hold off on that trade, because I'm actually not going to collect enough credit, and you know, 50 cents of credit is already not a lot, like for example for my Delta Airlines trade, but here 33 cents of credit, meaning $33 potentially of profit, it's really nothing. So I think that for Bank of America, I'm going to hold off. So you can see that sometimes I make some exceptions on which trades I'm going to take and which trades I'm not going to take, and usually if I'm not taking a trade, that's just because I'm not making enough bang for my buck in that particular case. And if I would want to make more money on Bank of America, I could, for example, sell almost a straddle, or for example, let's say a very tight strangle, and now I would make $106. It's true, I would collect a credit of $1.06, but I don't like to be that close to the at-the-money strikes. I like to have more probability of profit. So that's not really a trade that I'm comfortable putting in. But after that, if that's a trade that you, for example, see yourself putting, then, you know, fair enough, be my guest. So this is it for today. Once again, I'll see you tomorrow. By the way, I hope that you enjoyed this type of video where I place a trade and then I see you the next day to see how it went. Let me know in the comment section if that's something that you like. I'll see you tomorrow. So welcome back to another day in paradise. Let's see how the trades went. So first of all, let's talk about Citigroup. So as you can see, if we look at the stock chart, the stock behaved a lot better compared to yesterday. So that's actually quite nice. I managed to close my trade for profit. And if we go into my trading statement, we can see that I basically closed my trade, as you can see right there. And I had collected around like 55 cents and I closed it for 41 cents. I didn't make a big profit. I could have been more patient, it's true. I could have made more money, but I closed there. I think I made around like $20 per contract there. So not much, but you know, it's still good. To be precise, I made a profit of 30% on that position. So I could have like went for the 50% if I had waited a bit more. And usually I close my trades directly at the opening of the market. I'm really not patient when it comes to this. If I see that I'm in a profit at the opening, then I just take it. That's why I cannot record them live, because I'm just not in front of the computer when I close my trades. But that's already 30%. I'm not going to complain. It's better than losing a trade, obviously. Now, if we look at how Morgan Stanley did, well, it actually went a lot better than also Citigroup. So Citigroup, I made a profit of around 30% on it. And if we look at Morgan Stanley stocks, we can see that the stock actually opened way above where the stock previously ended, and it actually came back almost to the point of closing from yesterday, and I was able to close my trade for a nice profit. So if we go into my activity tab, once again, this is the trade that I opened, meaning that I collected a credit of 84 cents, as I said yesterday, and I closed my put side for 7 cents of debit. So I basically made around like $42 on the put side, and then I closed my call side for 32 cents of debit. So in total on that trade, on that Morgan Stanley trade, I made a profit overall of 46% on the position. I made a profit of around $46, $47. And obviously, depending if you sell more contracts, then you multiply that number by the number of contracts that you'd like to sell. But personally, I only sold one contract. And obviously, you know, a lot of people would say you could have made more if you had just sold more contracts. But as we saw yesterday with the Delta Airlines trade, you know, it's important to trade small because you never know what can happen. And so far, the Delta Airlines trend is a bit coming back in my favor. I think the stock is coming back a bit in my favor. It's around like $41.30, but I would need it to go back to around $42, $43 so as to be fully back in profit actually. So that's why I'm always trading small. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.